Hello there, Maverick Traders. This is Rob Reinold. It is the Trading Room. Happy 4th of July to all of our US-based traders. Let's go in and get into the market. In this session, we're going to go through what happened this week. We're going to look through all the sectors, score them all from +3 to -3, talk about the incoming news coming in this week. This is going to be a big week of news. And of course, I've got some trades for you.
All trades and analysis in this video are for professional traders only. This video has been released to the public after a delay required by our compliance department. Maverick traders receive this market recap immediately, along with real-time trading support and resources. Maverick Trading is a proprietary trading firm that backs professional stock and options traders with firm capital. Our traders keep 70 to 80% of the profits they generate. If you're ready to become a professional trader, click the apply link in the video description below. Let's break down what happened in the markets today.
Let's first start off with where the market went last week. The markets continued to climb higher. We closed at all-time highs on Friday, and on Thursday. And on Thursday, we closed at the high of the day. So you couldn't have gone out on a more bullish note into the weekend, into the long weekend. We also got the Congress passed the big, beautiful bill, where it's a major budget resolution that extends some tax cuts. It cuts some social spending, and it also raises the debt ceiling. The market didn't seem to care about this. It was pretty much a foregone conclusion that it was going to pass, and the market just didn't care. This is a good example of your opinion, because I know you probably have an opinion on this based on what side of the political spectrum you're on, good, bad. I don't care what your opinion is. The market is the only opinion you should care about in the world of trading. Outside of trading, go debate with your friends, go argue with people on Facebook. I don't care. But in trading, it was very clear that the market was not really concerned with this bill whatsoever. So when it passed, there was really nothing going on. So let's talk about what happened last week. We did have the first week of the month, which means there's lots of economic news. We got Joel's job openings, which there were more job openings than expected. And we also got manufacturing that was slightly better than expectations. Coming up to 49, anything below 50 is recessionary. Look, this number's been below 50 for like 2.5 years, so it's not that big of a deal. But you can see here, things are getting a little bit better here on that front. Then we got ISM services. I want to talk about this one. This is the big number, and that came in as expected, but much better than last month. So we've seen this economy weakening a bit, but the market hasn't really seemed to care. The only really freak out the market had, it wasn't even a freak out, but a little panic the market had was on Wednesday. We got the ADP employment report, and that came in as negative. And the market really said, oh my gosh, futures plunged. And then you know what? Buyers came back in on Friday. Look at this. We got the payrolls report, much better than expected, a drop in the unemployment rate. So look, it's a mixed picture. The economy is weakening in some aspects, but then some aspects are holding in really nicely, like employment. Everything is setting up into this week. Remember, this week, the tariff deadline expires. The Fed has said they would have already cut rates if it wasn't for the tariffs. The market wants a rate cut. The market's betting on a rate cut. The market's betting that the tariffs are going to come and go and be just fine. That's where we are at the moment, trading at all-time highs with an economy that's not that great, but not falling off a cliff, and a Fed that wants to cut rates but has to get some resolution. We're just waiting for the resolution of what's going to happen with the tariffs, which is really going to be happening this week. All right, last week, let's take a look at the final numbers. Dow up 1.5%, S&P up. Look at that, Russell powered up. On all the days that the markets were down, Russell was up every single day this week. Very, very strong. Let's take a look at the charts. And there's not much to talk about. We had this big run higher. We did not even get a pullback. We just got an extension. Okay, we're trading it at, I don't want to call them lofty levels because that's a dumb word. Lofty doesn't mean anything. But we've had a significant run. We've had a significant run of about 5.5% over 2 weeks of time. A lot of good news is being priced in. This is where I'm actually a little bit worried about this week. I am worried about this week, and we're going to talk about my opinion which I'm giving you right now. And then we're going to talk about the charts, which is the market's opinion. The market right now is seeming to just look through this tariff stuff and say, hey, you know what? It's all going to get resolved. But remember the big freak out the market had in April when it didn't turn out how they thought it was going to. The markets plunged. The Nasdaq plunged 20% from top to bottom. So here we are at this point again. We're sitting here and the market's like, hey, you know what? I'm doing great. Nasdaq doing great. Everything's doing great. Everyone's positive. The economy's limping along, but good enough. I really feel this is going to be a buy the rumor, sell the news kind of deal. And that's what I'm worried about with my opinion. So my opinion is much more cautious than the chart is saying. But I am not bearish in any way, shape, or form. I'm just saying I'm not looking to become more bullish now. I'm looking to become less bullish now in my trades. The heat map shows there's buying across the board. Last week was just one of those very strong summer weeks in the markets. On the calendar next week, there is really nothing. So here we are, market conditions. On Friday, when the markets were closed but the futures were open, President Trump came out and said, okay, we're going to start telling the countries that didn't make deals with us what the tariffs are going to be, and he threatened 70% tariffs. So the futures did trade down. The S&P futures traded down about 0.2%. The Nasdaq futures are down 1%. So we're starting off with a little bit of a rocky road here from the president's comments. We are likely to see some deals announced next week. I think we're going to get lots of little deals with little countries. And I think the market is going to, do a little applause, say, oh, okay, good job. But look, there's 4 countries that matter. Number 1 is China. Is there a resolution with China? If there is no resolution with China, this market probably got a little bit ahead of itself. Number 2, Europe. Is there a resolution with Europe? 3, Japan. And 4, Canada. If none of those get announced, this market is going to, I don't want to say it's going to do an April-style tumble, but I think we'll easily give back the last 5.5% that we got in the last 2 weeks. I think it's going to be a substantial pullback if we don't get deals with any of these 4. If we do get a deal with 1 or 2, but not the others, then I think we're looking at maybe a 2, 3, 4% sell-off. China's the big one. If the deal is announced with China and it's fairly favorable, then I don't see any reason why this market will hold in quite nicely. If there's deals announced with all 4, I think that's already priced in, so I don't think there's going to be a ton of upside, but there's definitely not going to be any downside. As you can see, nothing on the calendar next week. It's all about tariffs. So here we are. We're at a +3 market. I am worried about this week. And again, let me talk about what I mean worried about. I think we are in a situation where the upside is much less than the downside. So I call this asymmetric risk. Okay, everything goes good, all the tariffs go good, everyone's happy. What do we get? 1%, 2% this week? Okay. Let's say everything goes bad, and let's say that we announce 70% tariffs on China, Europe, Japan, and Canada. We're easily down 4, 5, 6% on that kind of news. So that's why I said it's asymmetric risk. I am still bullish, and I'm definitely going to be leaning bullish, but I think looking at the risk-reward situation here, I don't want to add on any aggressive bulls here. I just don't think the risk profile says that's what we should do. So hopefully I've made that clear. Hopefully you know my thoughts. This is my opinion. Of course, the market doesn't care about my opinion, but I've been doing this a long time, and this, again, I feel asymmetric risk here. I feel like the upside is not worth the potential downside here to be entering new aggressive bullish trades. So let's go in and look at the sectors, and then I've got a couple trades for you. Last week, lots of great moves here. Financials had a great move, second strongest sector. A lot of the banks passed their stress tests, and they raised their dividends. They're all trading at all-time highs. Really nice move. I know Corey had a trade on JP Morgan last week that just kicked ass. Materials and energy were strong as well. Industrials holding in there. And oops, technology had a negative on it. So technology was not down negative 1%. It was up 1%. A bullish week across the board. No question about it. Not a whole lot changed. Utilities was a 0 or +1. We're going to leave it at a +1. We've got communication services was at a +3. It remains at a +3. We've got real estate was at a 0. We're going to remain at a 0. Those moving averages are just flat. Here we have healthcare. Healthcare went from a -3 to a -2 to a -1 to a +1, and now we're just sitting here +1. So +1 on healthcare. Industrials, you can see, looks beautiful. This is where the capital is going. Money's flowing into industrials, +3, no question about it. We've got financials. Look at the money flowing into financials. This is substantial. This is by far the best looking chart here on the sectors. +3 on that one. Consumer discretionary is having a nice little breakout. Was a +2, moving it to a +3. We've had a nice long 2.5 month base breaking out to the upside, so consumer does look good as well. Consumer defensive, we're at a 0. Been into 0, we're staying at a 0 here until it breaks out somewhere. Technology, again, money's pouring into tech. We all know that. We all see it. Money is going into tech, +3. Materials had a fantastic bounce this last week. Went from a +1 to a +2 on materials. And then energy was a +1. It's going up to a +2 as well. Energy looks okay. I think it's just an okay bullish trade. I like financials and industrials much, much better. So to the upside, we got financials and consumer moved up. Materials moved up to +2. And we've got a little bit of rotation over here. Okay, so here we are. We've got the defensive sectors, staples, healthcare, utilities, real estate, lagging. Not a surprise. Not a surprise at all. We've got the cyclical things all rallying. Not a surprise at all. This is exactly what should be happening in a +3 market. This is exactly what the textbooks say should happen. So if we think there's going to be a pullback, this is where the strength and weakness is. If there is a pullback, yes, probably the +3 sectors will get hit, but it's still a bad trade to go short those sectors. It's just a bad trade. You'd rather be short some of the things that are lagging here. Last week, we had a bunch of trades roll off. We had 5 trades roll off, and all 5 were for gains. We had Next Era Energy in utilities sector. That rolled off at a small gain. We had Disney was max gain. We had Bluebird Bio max gain. We had Delta Butterfly, nice gain on that one. And we had Carvana with the max gain. So look, last week, the market closes at all-time highs. All of our bullish stuff coming in really nicely. We had a couple more bulls last week that are doing nicely. But let's take a look at where we are now. We only have 4 trades on in our slots. We got a lot of slots free. We got 5 trades on. A lot of slots free. But you can see that we are leaning hard, at least on the trades we have, to very bullish. It's not where I want to be going into this week. So I'm going to be doing some filling of some slots down here on the lower level. The market is at a +3. There's no question about it. Here's our allocations, our slots that we can fill. We just have to decide where we want those filled. And this week, I'm going to say, you know what? Let me not add on to my bullishness. As you can see here, I'm just not adding on to bullishness. I'm adding on a tiny bit of bearishness. So we got 1 neutral in utilities. We got two negative ones here in healthcare and consumer staples, and 1 little bull here on materials. That's it. This is going to take us down from being really leaning bullish on the trades we did have on to now leaning more like an overall +1. So we're still bullish, but we've definitely pulled back the overall bullishness. Let's take a look at some of those potential trades in those sectors. In utilities, I've got a siders trade on Dominion. All right, Dominion here, definitely sideways. We've got some resistance up here at the 58 area. 58 is resistance. We got some support down here at the 53.50 area. Here's the problem. It only has $2.50 strikes. So you would either need to choose the 55, which is going to be a bearish trade, or the 57.50, which is going to be more of a neutral to bullish. I am looking to be a little bit bearish here on this one. So I am going to be going a tiny bit bearish. Call this one a negative 0.5, but it's going to be a 5250, 55, 5750 butterfly. This is going to be the butterfly area. This is going to be the profit area in here. So this thing will need to move down into that area for this trade to be profitable going out to the monthly July 18th. Let's go on next to real estate, where we're going to have a short trade. This one is Americold, C-O-L-D. Now you can see that this one has just been sitting here at support. We've got this descending triangle here. We got this nice little bear rally from 1630 up to 17. To me, this one, I love getting in on these little bear rallies. When we have this the kind of stock that's just all the moving averages are just falling, falling, falling. Getting in on these little bounces has been a good place to get in. So here we are. We're also a little bit constrained by trades on the strike prices. There's only $2.50 strikes. So the only trade that works on this one is the 1750.15 going out to July 18th. This one's probably not going to get to 15, but hey, if it gets down to 16, that's going to be a really nice gain on that spread. Next up, we had a slight bear in consumer staples. This here is FLO, Flour Foods. Same thing here. We got the same kind of pattern. We got moving averages just falling. Now, this has been in a massive bull market, and this one cannot find any buyers whatsoever. When we get these rallies and bases, these are the moments. These are the moments to enter. You can see nice bearish engulfing candle on Friday. That's a nasty candle on a day where the markets close at all-time highs. So it's just a matter of, okay, how are we going to play it? I'm looking at the July 18th, 1750 to 15. Like I said, we are constrained on that. This one's right in the middle of the spread. So this is going to be a 50-50 win-loss, 1-to-1 risk-reward ratio. But it looks like a decent trade here. And then moving on to our one lone bull in materials. This is Mosaic. I talked about this one, I think earlier in the week, or maybe even the week before. We've been basing here after a nice run off the bottom. As you can see, we're not quite breaking out. But everything is telling me this thing wants to go higher. I just need to give this thing some time to make it to run higher. So I'm going to go out one more week. I'm going to go out for 3 weeks. I'm going to do the 37.39. That's going to be a really nice trade. You're probably going to get about 2-to-1 risk-reward ratio. If you want to do the 37.38, you can do that one as well. Let's go ahead and wrap this up. This is my opinion. This is not the charts. And I've told you for years and years and years to only trade the charts. And I'm going to continue to say that. But there are moments as a trader that you can look at a situation and say, I don't like the asymmetric risk here. And you can make a decision to tone down your bullishness. You can decide, hey, I'm going to trade less volatile stocks. I'm going to trade less volatile strategies. I'm going to trade strategies that are more neutral. You can do that. You can absolutely do that. Here's what you can't do. You can't go short. You can't say to yourself, oh my gosh, I totally agree with Rob. I think the tariffs are going to be a disaster. I'm going to go short. That is bad. That's not trading. That's just you trading your opinion, which is a terrible way to trade. You still have to trade the charts. This is where I love the slot system, to where you're allowed to fill those slots. Remember, I could only have 2 -1 trades and 1 -2 trade. So even if I wanted to get more bearish, I literally couldn't as long as I followed my trading system. And my trading system keeps me from being an idiot when I want it to be an idiot. So at this point, I'm about as bearish as I can get. I got 1 -2. I'm putting 2 -1s on. That's the most bearish I'm allowed to get in this market condition. The guardrails are in. That's why we have systems to keep us from trading our opinion. But I do think that the markets are priced for perfection. If we don't get it, I think we're going to see a bit of a sell-off. And based on the 4 countries I talked about, If there's no deal with China, I think we're down at least 2 to 3%. At least. If there is a deal with China, but not the others, maybe we're down 1 or 2%. We'll have to wait and see what happens, but I don't like the asymmetric risk here. Once we're through this period, I will be back on the bull train. We'll all be slapping high fives and buying some stuff. But until then, I'm a little bit cautious. Happy 4th of July, everyone. Everyone have a great weekend. Goodbye.